The first week of October may become a turning point for the US dollar, which has been gaining ground for the fourth day in a row. At least the current political and economic news is setting the stage for the US dollar's rise. In the dollar-yen pair, the greenback reached a one-month high following a statement from the new prime minister. Shigeru Ishiba, who has always been in a way with Herc, unexpectedly warned the Bank of Japan against further rate hikes. Likewise, the US dollar sharply strengthened against the euro, and this time dovish comments came from one of the most hawkish members of the European Central Bank. As a result, the US dollar index, which monitors the greenback trends against six major counterparts, recorded its highest three-week level and opened on Thursday within a corridor of 101.60 to 101.80. At the end of the third quarter, the US dollar index dropped by 4.8% against a basket of currencies. The main reason for this was the sharp 50 basis point rate cut by the Federal Reserve in September. Moreover, markets were confident that the first major rate cut since 2020 would be followed by another in November. However, now most analysts anticipate a more modest rate cut only by 25 basis points. The thing is that the US non-farm payrolls have set the tone for market sentiment worldwide, both a month ago and now. The non-farm payrolls showed a drop in new jobs beyond expectations in August, and July's data slumped to 89,000. September promises to deliver more positive reports. All labor market data already published this week clearly hints that September non-farm payrolls should be much better than the forecasts. Thus, the ADP report on employment in the private sector logged an increase of 143,000 new jobs. Although this is rather weak data for the US economy, the figure is notably better than the forecast of 90,000. Today, traders' attention will be focused on the weekly US initial jobless claims. Although forecasts predict an increase, even the slightest decline below the expected figure of 220,000 could serve as a reason for the US dollar to strengthen. And in any case, recent US economic indicators suggest that the Federal Reserve will hardly announce a 50 basis point rate cut. Ahead of such a crucial event, a minor pullback seems logical, as it would preface a further growth of the American currency. As for the economic data from the Eurozone, they, on the contrary, are a potential source of a weakness for the single currency, considering that inflation in September fell below 2% for the first time since mid-2021. A rate cut by the ECB this month already seems certain. There is also a high likelihood of a sharper rate cut, especially after Isabel Schnabel, a traditionally hawkish ECB policymaker, adopted a more dovish stance, further devaluating the euro. As a result, the euro-dollar pair has fallen to a three-week low. So the euro bulls are braced for new disappointments because the rate cut will hinder the inflow of foreign capital into the euro-denominated assets. Currently, the main currency pair is in a corrective phase from the resistance level of 1.1200. In the course of the correction, the instrument has already dropped by about 1.5%, moving to support for sellers at about 1.1000. If the volume of short positions decreases, it could slow down the corrective cycle and, as a result, trigger recovery in long positions on the euro. However, a breakthrough in the critical support line and especially consolidation of the price below the key of 1.1000 level will lead to an increase in the short positions and allow the peers to continue pushing the instrument towards 1.0950. We should also not forget about the inflow of capital into safe haven assets. In this regard, the euro is also in a weaker position compared to the US dollar. Today, there has been a slight lull in the Middle East, allowing investors to take a breather. This also applies to the oil market, which has been responding to the news with the high volatility. Today, the price of Brent crude entered a consolidation phase, holding at about $75 per barrel. there is not even a hint of a rebound, let alone a correction. Brent futures have slowed the bullish cycle in the range of $75 to $76, while speculative sentiment is still dominating trading. And as such, fundamentals technical analysis takes a backseat as speculators remain focused on the flow of information. Major US banks are already predicting a price of $100 per barrel is coming. Of course, that the jitters in the Middle East do not fade away. For now, that scenario is unrealistic. Our analysts reckon that after a brief pause, oil prices are likely to rise again. As for the Russian currency, despite the steady rally in the oil market, the ruble remains under immense pressure. After a sharp weakening on a Monday, the ruble spent the entire day yesterday, consolidating around the new levels. Notably, today, for the first time since April 2024, the Bank of Russia raised the dollar rate above 94 rubles. Overall, two factors are contributing to the weakness of the Russian currency. First, China is on an extended holiday, leading to a temporary shortage of yuan liquidity in the Russian market. And second, there is a risk that the trading in yuan on the Moscow exchange could be halted as early as the next week. And this is due to the US Treasury Department's ban. Amid the uncertainty, both the People's Bank of China and the Bank of Russia have yet to provide any official comments on the matter. For now, yuan buyers are taking advantage of the situation. Based on a technical analysis, the yuan-ruble pair has been trading within an overall uptrend, and this is proved by the consolidation above the level of 13.50. If this sentiment among speculators persists, the yuan-ruble pair is expected to rise toward the autumn 2023 high. However, the overbought factor must be taken into account, which could lead to local pullback. That's all for today. We monitor developments in financial markets. Subscribe to the channel and stay up to date with the latest news. See you soon.